Welcome to The Explainer. Today, we are going to break down the anatomy of a stock crash. We're looking at the tech company Rezolve AI, that's ticker RZLV, and really trying to understand what its recent collapse tells us about the market's deepest fears right now.
I mean, just look at this number. In only 2 weeks, the stock has been absolutely hammered, losing more than half of its value since its last capital raise. A 53% drop is a massive, massive red flag. It's the kind of move that makes everybody stop and ask, what on earth is going on here?
So, let's get right into it. The critical question on everyone's mind has to be, what is driving this massive sell-off? This isn't just some minor dip, This is a sudden, violent collapse that really demands a deeper look.
And the answer, as it turns out, isn't just one single thing. It's more like a perfect storm, a combination of two really powerful forces hitting the company at the exact same time. So let's break down that first one. First, we've got to zoom out and look at the big picture, because RZLV isn't trading in a vacuum. The entire market is going through a pretty significant and, frankly, fearful shift right now.
There's just this general sense of fear rippling through the markets, and it's causing the big money to run for the hills. They're quickly moving away from anything that's perceived as a riskier asset and piling into so-called safe havens.
And these factors just feed on each other, right? You get some weak economic signals, maybe some concerning employment data, and that fuels fears about the dollar. This causes investors to seek safety, which just sucks all the trading volume out of the market. And in an environment like that, high growth, high multiple stocks like RZLV, well, they're always the first to get punished, and they get punished the hardest.
But look, a general market downturn is one thing. That alone doesn't really explain the severity of this drop. There's a second, much more specific fear that is just haunting the entire software sector right now. And this one is a big one. What's happening is that Wall Street has suddenly and drastically lowered its valuation for pretty much all software companies. It's an event they call a re-rating, and it's happening at a speed that a lot of veterans are saying they haven't seen since the dot-com bust back in 2000.
So what is a re-rating? Basically, it means the market just wakes up one day and decides an entire category of stocks is suddenly worth a lot less than they thought it was yesterday. It's a collective change of heart, and it can be absolutely brutal because it often doesn't care how well your individual company is actually doing.
And here's the chain reaction that sparked this particular panic. First, some new, incredibly powerful AI tools get announced. Then, Wall Street immediately jumps to the conclusion that these new tools are going to make all the existing software companies obsolete. This leads to a massive, indiscriminate, shoot first, ask questions later type of sell-off that just tanks the entire industry. But here's where the story takes a turn. Just as this panic was hitting its absolute peak, a very powerful counter-narrative started to bubble up, basically arguing this entire sell-off was a huge, illogical mistake.
And that really gets to the core of it, doesn't it? Is this sell-off based on an actual, tangible threat to the business model? Or is it just an emotional overreaction completely fueled by hype and fear?
The turning point, or at least a major voice of reason, came from a pretty surprising place. NVIDIA's CEO. I mean, you could argue he's the most important figure in the whole AI revolution. He came right out and called the panic illogical. His point was simple. Powerful AI doesn't kill the software industry, it becomes its biggest customer, making those software tools even more essential.
So while all this chaos was swirling, Rezolve's own management, and remember, these insiders owned about 30% of the company, they started to push back, and push back hard, clearly believing their stock was now deeply undervalued.
They quickly put out a press release detailing millions of dollars in new deals and expanded partnerships with huge brands like Dunkin' and Kohl's. This was a very clear signal to the market, a way of them saying, hey, ignore the panic and look at our actual business. We are growing and we are delivering.
So now you have these two powerful competing stories, right? You've got the market-wide panic versus the company's strong fundamentals. So what does the actual trading data tell us about who's winning?
Well, if you look at the options market, which is where traders go to place bets on a stock's future direction, the fear is still very visible. 60% of the active bets are puts, which are bearish bets that the stock is going to fall even further. However, and this is a really big however, the data on short sellers tells a completely different story. These are the investors actively betting against the stock, and their positions have collapsed, falling from a high of over 30% all the way down to just 12%. This suggests the most aggressive bears think the smart money is no longer on the stock falling further. They're getting out.
And finally, if you just look at the chart, The stock is caught in a critical zone. It's trading between a key support floor around $2.20, a spot where buyers have stepped in aggressively before, and a ceiling of resistance at $2.46. Breaking through one of these levels will likely set the stage for its next big move.
And this leaves us with the ultimate question, not just for Rezolve, but really for the entire software sector. In this epic tug-of-war between broad, fear-driven market panic and the specific performance of a company's business, which force is going to win? The battle for Rezolve's stock price might just give all of us the answer.